Hello, I'm Lois Carey, a certified financial planner professional, and today we're going to discuss the trade deficit fear. We've been talking about fears. First of all, there's lots of information floating around. Now, first of all, you need to understand that a trade deficit is not like a budget deficit. It's simply the difference between what others get to sell to us over what we get to sell to them. So for instance, if China sells the U.S. $600 billion in goods and services, and the U.S. only sells China $140 billion in goods and services, then there's a trade imbalance or a deficit. If the U.S. says that it's not fair, it means that we should get to sell to them as much as they're selling to us. Now, China has trade barriers, taxes, and tariffs, etc., to their consumer markets, and the U.S. doesn't have as many taxes and tariffs, etc., on the items its consumers receive. Once again, there's an imbalance. So if China loses the U.S. market share due to tariffs, and the U.S. doesn't have as many taxes and tariffs, and the U.S. has much less to lose in negotiations, which country would be hurt the most? I hope you're beginning to see where the fear factor has been brought in and magnified, when it really doesn't exist to the magnitude we have been led to believe. Now, secondly, we've heard that China owns an astronomical amount of U.S. treasuries, and the fear is retaliation by selling them, thus overwhelming the U.S. economy. Well, guess what? China only holds or owns about 4.8% of all of our treasuries. So even if they cashed in, it's not a big deal. And China probably will not cash in on us treasuries for two reasons. One, China is committed to the U.S. Treasury as a means to peg its currency, the yuan, to the U.S. currency. Why? Because it stabilizes, our dollar stabilizes their currency. And pegging their currency to ours keeps their cost of exports more competitive in global markets. And thirdly, there's so much drama and hyperbole over negotiation. Trade wars is a loaded term driving fear. So let's review. Fears sell media attention and drives the fear and trade on Wall Street. Fear is in fashion right now and greed is not. And believe it or not, fear can be really good for the market. Everything is going to be okay. There's lots of things to be afraid of, but believe me think of this is just not one of them, not the trade deficit. Thank you.